All right, everyone, welcome back to the Trading in Public series. This is day 2. Got a couple cool things that I'm going to share with you today. The main thing is that we released a case study from one of our members, Jay, who literally made 225 grand trading earnings over the last 2 years over a huge number of trades. And it's like the perfect case study to release right now with earnings season kicking off, because it just showcases how when you really diversify over a large number of trades, the risk premium is really pronounced, and it's super cool. He made a bunch of money and he documented every trade, and we're able to take a look at that together. But first, let's talk about the trade journal that we're doing together with the PA account. So the last time we spoke was on the 21st, and since then we've placed 1, 2, 3, 4, 5, 6, 7, 8, 9 trades since then. So over the last 2 days, about 4 to 5 trades a day, and overall accounts up a little bit over those trades. We took a couple losses here, right? Coca-Cola was one of them, and QS was another one that I'll highlight there. QS being the biggest one so far. This was an interesting trade because normally I don't trade tickers this small, but I decided to give it a go because it was really liquid, and the back test looked really good. And then look, this is just the nature of earnings. Once in a while, there's a blowout move, right? I think QS moved 26% on the open, and so we had to just eat that loss. Thing is though, right, still a relatively small loss in the grand scheme of things. This is the beauty of trying to take a lot of trades, right? So every trade's going to be like, 50 to $100 P&L, hopefully, as we get our sizing more correct and everything. And then we just have more winners than losers over the long run, and it results in account number going up. That's what we're really trying to accomplish. Besides that, there's no real trades that I want to point out here. These all sort of followed a similar analysis to what we did the last time. I'm looking at the back test. I'm trying to figure out if I think that the P&L reflects what the risk premium should look like around earnings. So many small winners, occasional big losers, something like that is what we want to see. I talked with the community about it, of course. There's a lot of people trading earnings there. That really helps. And then just trying to pack on a bunch of trades. It's really not that complicated what we're doing. That's our whole shtick, right? It's not that complicated. So that's where we're at with the trade journal. We'll take a look at a couple trades for today. I haven't actually done my scan yet, so we'll do that live together. But first, I want to talk to you about this trade journal. All right, so this trade journal, this case study that we did with Jay. So check this out, right? So obviously, got to give it the clickbaity title. Got to put the numbers out there. That's the game, right? That's YouTube. I'm going to actually make a video about this where I break it down myself. But if you want it, I'm going to link it in the description of this video. It'll be there for you. So this document is actually the written version of it, where I talk about how Jay analyzes trades. We do a Q&A together where I talk to him about, how he runs the strategy, how he actually pulled this off. But the thing that I feel like a lot of you skeptics out there will want to see is this, right? So you click this link here, we come over to here, boom. This is the individual trade log. This has literally everything. All the trades that Jay took. Documented, strikes, sizing, P&L, everything. And then really what this first page is doing is just aggregating it into the key metrics and some cool graphs for you as well to see check this out. Look at its correlation to spot. Isn't this what you want in a strategy? Something that's just uncorrelated to the market that, regardless of market up, market down, accounts go up. That's that's pretty sick. Obviously, there's huge swings in it, right? If we come here and we take a look at the distribution, right? You look at a 10% drawdown in a single trade. Things like that happen with earnings. But that's why the risk premium's there, and that's why the overall P&L looks like this, which is beautiful, right? Even though you have these huge drawdowns, this is the type of return that we would really hope to see. Did about 90% over a 2-year period. It's pretty sick. So yeah, I'm going to link this in the description. You can go over it. And if you have questions about it, feel free to hit me up. Just leave a comment on the video. In fact, guys, if you can leave a comment on the video, that actually really helps the algorithm. So if you've made it this far, do me a favor, leave a comment, try to make it at least 10 words. Just talk about earnings trading, right? Say something about this journal. And, that really just helps us get some traction in the algorithm. And hopefully we can get a cool little community going in the comments here eventually. And have some fun. So with that being said, let's maybe take a look at some trades that we'll take together today. So let's see what's on the menu. I love this time of the year because, there's just so many earnings trades to take, right? We've got 54 tickers on our scan for the day, right? You can see the number here. I'm just using the PA earnings premium scan. I sort by straddle return since, maybe there's not the most statistical evidence for us sorting this way, but I like it. It works for me. I know a bunch of people it works for. Screw it. We're going to do it. And then I'm looking for tickers that are liquid, maybe around the $50 to $100 mark. That's like prime territory for me. So right here at the top of the list, a bunch of these are actually looking really sweet. So Western Digital Corp, this is obviously looking really good. Let's take a look here. And I'll just do the same thing again, everyone. Like, what we're doing here is not complicated. Boring strategies that actually make money. That's the shtick, right? That's what we're doing. And so I'll just walk you through the story of how I look at this, right? So earnings is today after market close for Western Digital. The stock is flat today so far, which is really nice to see. If there's a lot of like non-event realized volatility, sometimes that can make me feel a little iffy about the trade. I like how it's not like a super tiny company, right? It's $21 billion market cap. And for this upcoming earnings, market's basically saying this thing's going to move 7%. Okay, that's a pretty big move for a company. I like when the implied move is pretty big. That's cool. And what I like relative to it as well is that the average earnings move is 4.08%. So about a 3-point spread there that we can look to monetize. That could be like the risk premium on average. We could call it something like that. So that's cool, right? Implies big range, moves less than big range. That's pretty good. Max move we've seen is about 10%. So implies this range, usually moves this range. Biggest move was about that range. Pretty cool. And a huge average straddle P&L, right? Like 26% is just like, are you kidding me? Like, that's pretty sick. So one thing I'll keep in mind here is that the last move was implying, here on the end of July, it was implying an 8.5% move. It ended up moving 10. Right? So that's a big move on earnings. Sometimes that will like impact how I think about things. I might take a second and look into that earnings. There's a chance it was just a surprise. But one thing that's interesting to note is that the implied move for this event was, almost like 30% higher, a little over like 40% higher than it usually is. So with that being said, like maybe there was something specific about this event. Implied move was higher than usual. We can actually take a look in a sec at the average implied move. Let's actually see if we can pull that up here. Right, so we can go to the columns here. We'll add the average implied earnings move. And now we can see that here. So, okay, you know what? Maybe I'm actually overreacting, right? So this is kind of cool. So for WDC, the average implied earning move is actually about 7%. So like, I'm tripping. It's fine. The earnings move is in line with what we normally see. Nothing to worry about. So overall, this looks good, right? I look at this back test here. This is exactly what I want to see, right? This is like, I want my P&L to look like that. That's the basic way I think about it. If my P&L looked like this, I'd be happy. So I will add this trade to the portfolio. Remember, seeing a backtest like this doesn't mean I go all in on this trade. Doesn't mean I'm over leveraged here. It's just another one that I'm going to take. Earnings is a really long game. We're going to take like 500 trades this year. So I'm not going to pile in on one. Like we saw what happened with QS. Like if I pull up QS quick, check this out, right? Like this trade from yesterday. Like the implied earnings move was like huge. And then it just moved way more. So, we can't over leverage no matter how good things look with earnings, unless there's something external to this data that we're seeing, which maybe can influence us. But that's for another day to talk about. So WDC looks good. We'll go through a couple more quickly here. Skechers, let's see what's up. All right, similar story, 7.73% move. 6.63 on average. It's not quite as juicy. Still a pretty big straddle P&L. Max move at 16.6%. So I'll probably stress this to like a 30% move as like, I usually take that and double it kind of thing. As for what I, say is like, okay, like this is the loss that I should sort of like reasonably expect to be possible for this trade. Maybe like a few percent of the time. 1.58K average option volume, right? You always want to keep an eye out for stuff like that. Probably going to be less liquid. So when I structure my trade, I'll be careful about where I go on the chain. I'll try and go somewhere that looks a little more liquid. Try and see where people are trading. And then, that'll, whenever the volume's low, things can get a little sticky in the morning when you're trying to exit the position, especially because something that was maybe at the money is now deep out of the money potentially. But overall, looks really good. Nothing too complicated here. Last move was really small. That's really sweet. Hopefully we see that again. But it does look pretty sporadic about the realized move is usually not super suppressed. So, I'm not expecting like a 100% winner on this. Keep in mind, something else that I've been messing around with recently is like sometimes I will actually trade things that have a monthly expiry that's not like expiring this week. So sometimes there's no weekly, and I will trade that monthly actually. So just if you do look into these trades, you can keep that in mind as well. For those, you do want it to be a little bit more liquid because like your edge is just going to be smaller. There's so much non-event vol around it that kind of dilutes the impact on the option premium. So if you're crossing a huge spread to get into a monthly, you want to be careful about that. It's going to eat all the edge basically. But a couple of the trades have been that type of a structure where I'm trading, it's like a 25 DTE or something. And it's worked out so far. So I just want to throw that out there for you guys if you do find yourself in that situation. Let's take a look at Carter's here. Another banger. This one looks sweet, right? Low option volume again, though. Careful about that. But this is sweet, right? Like this is, I don't know, like I'll take this. I like how the moves are usually like really suppressed. Implied move is pretty high. I don't know if that means that like market just expects one day there will be some catastrophic news or something. But like even that, it's only it's not implying 50% and moving 2%. It's implying, between 5 and 8. If we come back here, we take a look, right? The average implied move is 6.5. So yeah, I love it. I would throw that in the book as well. And then let's take a look at Colgate here. We'll do that as the last one. 5.14K volume. Not as amazing, right? You can see here that the move is usually not that suppressed relative to the implied move. We should see like, if it's implying 5, or 3.5, it'll move, 2.5 or whatever. That seems to be the trend recently. It is a pretty big company, and it is, Colgate Palmolive is like, it's kind of very established, probably very forecastable in terms of what happens around earnings. So it would take a big surprise for things to really blow out. And that kind of also makes me want to take it because even if we get a big move, it's not, the odds of it moving 20%, for example, or 30% are pretty low, I think. Knock on wood, hopefully I didn't just jinx it. Looks like the Q4 is a more suppressed move on average than the other ones. It hasn't seen these blowouts that the other quarters have. Not that that really matters. Not a lot of data to support it, right? We've only got 16 events we're looking at in total. But yeah, that's pretty much it, guys. Like, I keep things simple. I literally just went through this analysis. What I'll usually do from here is I'll run it by the earnings gang, the guys in the group that are running this strategy. And it's a pretty big group that's doing it. Get some ideas from there, talk about fills, and then I just slap on a bunch of these trades and, I don't know, pray. I feel like that's kind of what you do after market close when you're trading earnings. Hope for the best, right? So far so good with the strategies. I'm thinking like every other day, every 3 days, something like that is when I'll make an update video like this. In between those days, I've got a really, I don't know if y'all have seen this, but I made this like this free course for a beginner to pro. It's just a bunch of it's 60 lessons. Like it's a huge thing I put together. And I found a way to convert them into PowerPoints. And so what I'm thinking of doing is making a video series out of this, making a whole new course, PowerPoint oriented, where I'll teach you a bunch of stuff about option selling. So you can expect those to start coming out next week. I'll give it a try, see if people on YouTube are liking it. And if you are, then that'll be great, right? Like in the end of the day, we've moved out of the education game and moved into the software game. So my entire objective is just to make you as good of an option seller as possible. And then hopefully you get good enough that one day you want our tools, right? We got some good stuff going, positive EV strategies. Maybe you want to add that to your book. and you sign up, you join us, you become part of our cult, you know. So obviously I'm joking. It's only kind of a cult. It's not a total cult. And so that's the idea. I'm thinking this will be a cool way to share some education. But I'll link this as well. I think I did in the last video too. This is sweet. This is like, I link this to everyone I can. Like people who are like, I don't even want to trade. I'm like, take this course. I love it. So yeah, hopefully you love it too. All right, everyone. Happy trading. Hope you enjoyed today's yapping and got some value out of it. Good luck to us on the trades tonight. We got the Friday expiration, so hopefully we can juice the premium for everything it's got. And then maybe tomorrow I'll make a quick video chatting about the ETF strategy since we roll it on Fridays. All right, everyone. Peace out. Talk soon.